Indian EV manufacturer Ultraviolette Automotive has unveiled the F99, India's first superbike. They showed this off at EICMA 2023, and the superbike is part of the factory racing platform, which means that it's first going to be made for racing, and then they're going to start selling a regular version to everyday consumers. It's got a top speed of 265 kilometers per hour, and the company has been working on this for almost 2 years, and they finally unveiled it in Milan. Now, the bike is still under development, so you can't pre-order it or anything like that, and the company wants to stabilize their racing platform before the final production of this bike is started. That production won't begin until at least 2025, and also this bike is expected to cost around 8 lakh rupees. So I know that that's a long way off, and also that price point is not going to be accessible to a large majority of people, but I thought that this was worth mentioning because, again, it's India's first superbike, not first electric superbike, first superbike in general. M-Flux Motors was working on the M-Flux 1, which was supposed to be India's first superbike, but unfortunately it seems like that company has gone out of business, or at least they're in hibernation mode, whereas Ultraviolette Automotive is actively building motorcycles, and they're selling them too. The F99 has been a huge success. At the beginning of 2023, Ultraviolette Automotive was planning on selling 15,000 units of the F99, and that was just in the first year alone, and they wanted to increase that number in 2024 to 50,000 units as deliveries started to export to markets like Europe and North America. And by the way, at an ex-showroom price of 3.8 lakh rupees, if the F99 did in fact sell 15,000 units in 2023, then that means that it generated sales of 570 crore rupees. And I don't know, I love this story. I love the fact that this company, this Indian startup, is creating these extremely high performance, world-class electric motorcycles that are getting orders from people all around the world. And they're doing it all in India as an Indian hardware company. I find that so inspiring and exciting. But anyways, now let's move on to another topic. Profitability is the key theme of Q2 of FY24 for Indian startup companies that have gone public. So I want to look at a couple of companies here, but let's start off with Zomato and take a look at their Q2 results. So as many of you know, Zomato did turn profitable in Q1 of FY24. They generated net profit of 2 crore rupees, but now in the second quarter of the financial year, that profit has increased by 18x. They're looking at 36 crore rupees in profits this quarter, and also it's interesting to note that this profit hasn't come at the cost of growth. In fact, their quarter-on-quarter revenue growth has continued, going from 2,416 crore rupees in Q1 to 2,848 crore rupees in Q2. Now, if you want to understand how and why this has happened, a big chunk of it is actually because of Zomato's Gold membership program. Their Gold members have almost doubled from 2 million in Q1 to 3.8 million in Q2, and these members are responsible for 40% of Zomato's gross order value. Now I want to take a look at the profitability of another Indian tech company. This one is the second largest OTA by market cap in India, online travel agency, and that's EICMA. Now, unlike Zomato, EICMA has been profitable since day one, but they posted their financials for Q2 of FY24, and it continues to be very impressive. But first, let's take a look at their revenue. So it actually increased by 20% from 102 crore rupees in Q1 to 120 crore rupees in Q2. Then though, let's look at their net profits, which have increased by 82% from Q1 to Q2, 26 crore rupees to 47.18 crore rupees. And this is actually their highest ever net profit for a quarter in the lifespan of the company. Now, one of the ways that EICMA has differentiated itself historically from other OTAs is in its pricing, because as we all know, online travel agency pricing is often very complicated and difficult to understand for your average consumer. And so for the longest time, EICMA was known as the OTA that didn't charge any convenience fees. And so their prices were usually a little bit lower than other OTAs. Now, the thing is, convenience fees are oftentimes used by OTAs to fund very important parts of their business, for example, higher quality support staff, or alternatively, things like marketing. But in EICMA's case, they actually don't spend that much on marketing. In fact, their marketing spend is less than 2% of their gross booking revenue at the moment. And also another one of their strengths is that they've been actively acquiring profitable companies which add positive value to the larger parent company. Also, it's interesting to note that EICMA was listed on the stock exchange 2.5 years ago, and every single quarter since then, the bookings that they're getting through buses, trains, and hotels have actually been increasing more quickly than the bookings that they're getting for airline tickets. That being said though, I did log into the EICMA app today to see if there is in fact zero convenience fee, and it seems like it's a bit of playing around with pricing on the part of the company, maybe a bit of optics tactics to make people feel like they're not paying a convenience fee, even if they are. In this case, I applied another discount coupon, and because of that, I was charged the convenience fee. So maybe the company used to be a company that charged zero convenience fee. Now that they become public, though, and they need to turn a profit and increase the rate of their profits every single quarter to keep their shareholders happy, maybe that's become less of a priority, and maybe they're just like every other OTA at this point. And then lastly, when it comes to this positive profitability news, let's take a look at Zerodha Technologies, because they've been able to increase their profits by 5%. And I think this news has a lot of people here in India surprised, because the narrative at the moment is that all gaming companies are bad because they're all real money gambling companies. But in fact, Zerodha Technologies, one of the ways that they've been able to differentiate themselves and become a profitable, sustainable, safe business that's not affected by this new GST tax in a big way, is that they have actually built a diversified gaming portfolio. So their quarter-on-quarter revenue has increased by 12% from 266 crore rupees in Q1 to 297 crore rupees in Q2, and their net profit has increased by 5% from 19.5 crore rupees to 24.2 crore rupees. They're also planning on launching about 20 new games across multiple platforms in the next 18 months, which of course is going to strengthen their position in India's rapidly growing gaming ecosystem. All right, now let's move on to the next piece of news here and talk finally about Mamaearth's IPO and the performance of their stock over the last couple of days. Now, at Backstage with Millionaires, we really haven't looked at this topic because things change pretty quickly when it comes to a company's IPO and its stock price following that IPO, and it's still a pretty volatile time for this company. There could be a lot of ups and downs, but I wanted to take a look at what's happened so far. So when Mamaearth's IPO was closed, it was oversubscribed by 7.6x, which was definitely seen as a success, to the point where even Ashnir Grover congratulated Mamaearth's founders on their successful IPO, saying, proving all Twitter IPO pundits, valuation experts wrong. Now, the interesting thing is that this oversubscription was actually led by professional investors, QIBs, qualified institutional buyers, and NIIs, non-institutional investors. They oversubscribed 11.5x and 4x respectively, while retail investors, everyday people like you and me, barely subscribed by 1.25x. And when the company was finally listed, it opened at 330 rupees, which is a premium of just 1.85% on the National Stock Exchange, and 324 rupees, which was the IPO price on the Bombay Stock Exchange. And at the time of me filming this video, Mamaearth's share price is already down by more than 4% from yesterday, which is a similar trend from other Indian startup companies that went public, like, for example, Zomato. They opened at a slight premium, but then their stock prices dropped significantly as the company was focusing on growth over profitability, but now they've changed their tune and their stock price is performing better. So it's very possible that this could be the story for Mamaearth as well. Maybe this is just a temporary blip. The stock goes down, the stock goes up, right? Stock markets are pretty crazy sometimes. Or if it continues to go down, then Mamaearth could try to figure out a way to turn things around and get the public back on their side. But anyways, now let's move on to another topic. Zerodha facing a technical glitch that affected about 20% of their users. So this glitch happened on the 6th of November on Zerodha's trading platform Kite, where users were unable to see their trade options, stock holding, and their funds page. And unfortunately, this happened right when the market opened, causing losses for a lot of users. And the unfortunate thing for Zerodha and their users is that this actually seems to be happening more and more frequently. So there was a very similar technical glitch that happened back in October, and then it also happened earlier in 2023 in July. Zerodha attracts a more technical crowd, and so a lot of their customers had actually moved from full-service brokers, which were charging higher trading fees, and they moved over to Zerodha to save money on those fees. However, now after all of these glitches, a lot of these customers are wondering if maybe they should have actually stuck with their full-service brokers, which were more reliable, and they didn't face these kinds of glitches or outages with them. Some people are even asking for refunds on the money that they lost during these outages because they just weren't able to use the platform properly. And this is all part of a larger, more worrying trend for Zerodha, where it looks like their user growth has actually stagnated, and between September of 2022 to September of 2023, they've actually lost active investors on their platform. But anyways, now let's move on to the next piece of news. This is pretty big, actually. Byju has finally released their financials for FY22. But the thing is that these financials are very much incomplete. So Byju simply showed the revenue and loss figures for their core business and nothing more. So this includes all of the financial information from the companies that Byju has acquired. But let's just take a look at these financials here for a second. So we can see here that their revenue has increased by 2.3x from 1,552 crore rupees in FY22 FY21 to 3,569 crore rupees in FY22, and their losses had come down from 2,406 crore rupees in FY21 to 2,253 crore rupees in FY22. But of course, the question now that everybody is asking is, what are they hiding? Why aren't they releasing their full financials? And so looking at the morning context, the answer that they gave at least was optics. So back in 2021, Byju Ravindran had said that their India business could slow down by as much as 75%. However, now Byju's is showing strong growth in their FY22 financials. Their revenue is going up and their losses are going down. And so even if there is a lot of omitted information, it seems to be a positive message, right? But then at the same time, this news comes out that Byju's has laid off 600 more employees. Now, it looks like this happened back in October and seems to have affected their content and marketing teams specifically. And also, these layoffs were part of a restructuring that's being done by Byju's latest CEO, Arjun Mohan. And so coming back to that topic of optics, laying off 600 people is never a good thing, especially when the company is struggling so much. And so perhaps they thought if they released some positive information from their FY22 financials, then it would sort of offset some of that negative news. But anyways, now let's move on to some funding news, and specifically I want to look at Kunal Shah's latest investment. So the first startup that he's invested in here this last week is called Zerodha, which is a home rental platform, and what caught my attention about this startup is that on their website it says no brokerage and no security deposit. This is probably what sets them apart from the sea of home rental startups out there, but according to their website, they're only operating in Mumbai at the moment. So the only advice that I can give to the folks over at Zerodha is that we definitely need your services over here in Bengaluru as well. All right, now let's move on to the next angel investment by Kunal Shah on Finance AI. This startup's flagship product is called NeoGPT, and basically this is a chat GPT for banks and financial institutions to deal with financial operations. And so I'm not sure if you noticed, but we didn't actually talk about how much Kunal Shah is investing into these companies, and that's because we just don't know. These are probably small amounts, undisclosed, happening between Kunal Shah and these startup founders, but it's part of a segment that we wanted to add to this funding news part of our videos, which is tracking some of India's top angel investors to see the companies that they're choosing to invest in, hopefully to reveal some insights about the industries or the markets or spaces that are hot right now and the things that angels are focusing on. So if you enjoyed this segment and the idea behind it, then definitely leave a comment down below and let me know. But now let's move on to the larger funding news. $166.3 million have been raised across India's entire startup ecosystem this week. This is quite a bit lower than last week's $502 million, and almost half of this funding went to one company, Pune-based logistics unicorn ExpressBees, which raised $80 million in their Series G. And it's interesting to note that they've raised these funds at the exact same valuation as their previous round, their Series F round last year in 2022, which was $1.4 billion. Next up, we have Zepto, India's first and only unicorn of 2023, and they raised $31.5 million in their extended Series E round. And then finally, we have three-wheeler EV manufacturer Euler Motors, and they raised $14.4 million in their extended Series C round. All right, that is all the startup news that I have for you guys this week. I really hope you enjoyed the video, and I will see you in the next one.